We are counting down, just about 15 minutes away from the closing bell on Wall Street, and it's been a doozy of a day. Stocks down sharply this afternoon, eroding Tuesday's gains and making for one heck of a roller coaster for investors this week. Let's bring in MSNBC contributor Jared Bernstein, former chief economist and advisor to Vice President Biden, with us from Washington. Jared, what's behind the fall today, and how much longer is this whiplash going to last?
Well, I think if you think about the economy as kind of a sick patient right now, and Dr. Ben Bernanke as the doctor, the big question yesterday was, will the doctor prescribe the medicine? Will the doctor prescribe the medicine we need in the long term? And yesterday, the Fed said they would. They said they'd keep interest rates low for another couple of years, and the market was elated. Then you wake up the next day, and the patient says, "Oh my God, I'm going to need medicine for another 2 years." So yesterday you had a 400-plus point gain. Right. Today, folks are reflecting back again at the underlying economic weakness, of course, both here and particularly in the banks of Europe, where there's worries about contagion to larger countries.
Now, we saw a new poll today showing almost half of Americans think the worst is yet to come for this economy. How much is consumer confidence, or the lack of it, fueling this cycle?
It's definitely part of the problem, but it itself is, of course, a function of what matters most to consumers, or basically people, which is their jobs, their incomes, their paychecks, their living standards. What really doesn't matter a lot to people is a debt ceiling debate. In fact, the budget deficit is a far second to or third or fourth to people's major concerns versus the jobs deficit. So as long as Washington was kind of in this dysfunctional, self-inflicted wound mode for a couple of months, that hurt consumer confidence because policymakers weren't working on jobs. That's what matters most to people right now.
So, Jared, is there anything immediately to be done to stop these perilous swings? How would you advise the administration right now?
I would say the best, first of all, I don't think there's any immediate Band-Aid. I mean, you could have the Fed maybe come out and say, actually, we're going to do something more than we said, but that is so unlikely. I don't think the administration can do anything except the following, and I believe the following will help. Get out there with a single message to the American people, reflecting on what I said a minute ago. Folks, I know we've been talking past you for the past few months with all the debt ceiling, self-inflicted wound, extremism on the conservative side. I know that. But I know what really matters to you. It's your jobs, it's your incomes, it's your opportunities in the job market, and I know we've been ignoring that. But we're going to turn back to that now with a laser-like focus. We've got a little street cred on deficit reduction, so now it's going to be about jobs. And here are the ideas. Now, Congress may block those ideas. In fact, I'd even say that's likely. But even so, I think to see the president fighting for those ideas would help.
Jared Bernstein, thank you.